Greetings, everybody. Dave DeWalt here. I am the CEO and founder of NightDragon. We're an investment and advisory firm coming to you live from NASDAQ market site here in New York City. It's like coming home for me in some ways after all the IPOs and fun we've had at NASDAQ here, ringing bells and having celebrations. I'm waiting for the confetti to come down in a minute after we do that, but it's great to be here. We focus in on cyber safety, security, and privacy at NightDragon, and we have an event we call NightVision, and today we have 10 amazing guests, very special people to NightDragon and experts in different areas of the market. And today I have two managing directors from JP Morgan. These two individuals, Alex, say your last name again.
Takhtajan.
Takhtajan, thank you. I had to get that out really well. Alice and Matt Seiter. So thank you both for coming in here. I really appreciate you both being partners. And Takhtajan, I'm going to practice that 3 times as I go through this whole thing together. But maybe to start out, like what a world we lived in the last couple of years. I think about cyber having these, what I call super cycles for a minute. And I talk about these perfect storms, and what we watch is the threat landscape drives spending, which then drives, sort of investment cycles. Then we watch a lot of IPOs happen. And in the last 18 months, it's been a little different from the market conditions for a lot of companies. Maybe Alice, start with you. Kind of how do you encapsulate the last 12 months of sort of market conditions and things? And is winter over when we think about that analogy? Are we coming into spring? How do you feel about your optimism?
Yeah, absolutely. Look, I think you're spot on. The winter is slowly but surely coming to an end. It's warming up. So a few observations that share in the market. One is that overall IPO activity has certainly accelerated. We're now at 2.5 times the levels of activity this year versus last year. Yeah. And I think it's great to see also a little bit more diversity in the types of companies going public. We've seen the first 3 tech IPOs in the last couple of, really since 21, all come public in September. ARM, Instacart, Klaviyo, obviously great to see companies come to market. And a few things that kind of describe from really what are the characteristics of these companies. I'd say they're all scaled, established businesses, good growth, strong profitability, and the investor interest across the board has been very strong for those businesses. So I think we are certainly encouraged by what that means for next year, but we're still in the early stages of reopening.
So when you talk about these types of companies, Alice, for a second, so we always hear rule of 40 type things, rule of 50 type things. Where were they? And do you see that as a norm going forward, having to follow that kind of model?
Yeah, it's what we've really seen, especially in the last 6 to 9 months, if you look across just valuations broadly for public tech companies and those companies that are looking at IPOs, those that are really getting those premium valuations are in the growth rates of kind of that 20 to 30% zip code and strong margins. The highest valued companies today are showing free cash flow margins of 20+%. So you're really looking at that rule of 40, 50 plus, right, with that really sustainability of growth and profitability.
It brings deja vu back. My years of running McAfee, we had exactly that. We called them triple doubles. We grow the top, bottom, and cash flow, and we were rewarded for that. Then my years as FireEye, it was much more of like growth on the top line. So good to hear we're guardrailed quite nicely as we think about companies, both EBITDA as well as top line growth. Matt, talk a little bit on the other side then. So we have this IPO market, and now we have this M&A market as well. And for a man who's done 1 or 2 mergers and acquisitions in his career, maybe multiplied by hundreds on that number, how do you encapsulate the M&A space right now over the last 12 months, and what do you see going forward for that?
Yeah, so M&A was down like 30% in 22 and 60% in 23. And in 23, the first half, we saw buyers being reticent and sellers being uncomfortable. That's why we're down 60 to 70% this year. What we're seeing in Q4 of 23 is sellers being more comfortable selling. And that comes from public equity investors, public companies saying, you know what, being public isn't great if I'm not at large scale. Versus when we said in 2021, if you're 100 million of ARR, go. In 23, I think people are saying if I'm below 300 million of ARR, the upside of being public isn't worth it. So I think the second thing is on private companies, you're seeing the latest the funding basically saying, okay, I know that I'm going to be underwater for a while. I'm willing to transact and roll into something else, or to get my money back with a slight return. And so I think the thing we need in 24 for the M&A market to really take off is 60% of software M&A is sponsor driven, 70% of cyber M&A is sponsor driven, over $1 billion, the bigger chunkier deals. And so we need sponsors, their ICs to be a little bit more comfortable leaning in, and we need strategics. And before when we talked here, you were talking about, you know, what Palo Alto's been doing and Cisco Splunk. I think what we really need to have a healthy market is a couple more people to compete with Palo Alto, you know, and for acquisitions.
Yep. Yeah, it's interesting. I want to turn to the future in a second, but I want to stay on that theme because as I watch these pendulums over the last 25 years in my sector of cyber and national security, you know, whenever we've seen sort of the threat landscape get high, you've watched best of breed sort of emerge. FireEye was one of those examples, Mandiant. Whenever the threat landscape kind of subsides a little bit, you see best of suite occur. I feel like we're in the middle of a lot of best of suite happening at the moment. Even though the threat landscape's high, we have these cloud titans. You know, you think about what Google buys, Mandiant, right? 5.4 billion. You got Microsoft hitting a 20 billion a year revenue engine in cyber. You got AWS, who is going to have to catch up in that market. You then have all these cyber titans that you alluded to, like Palo Alto and CrowdStrike, maybe Zscaler, some others who have to, Checkpoint, Fortinet, needing to buy and build their way into something. We saw our first $100 billion cyber company valuation the other day in Palo Alto. I was teasing Nikesh Arora, you know, would he be the first one, you know, some time ago when he was almost half that. So here we are hitting $100 billion type companies as well. I mean, do you see the Cisco Splunks and these bigger mergers happening as well as we go forward? Because to keep up with Palo Alto, keep up with CrowdStrike, keep up with Google, you've got to have scale.
I agree, yeah. I think where you might see transformational things is potentially companies a little bit, I would call like the top 6, like CrowdStrike, Zscaler, Palo Alto, Microsoft, Fortinet. Those players are now, they went from 20% of the market 5 years ago, so the pure software market, security software, to 60% today, because they're just consolidating spend. And so, and I think the best of suite is winning out. And so I think you could see some bigger players, some like, let's say below a CrowdStrike, so below like that $30, $40 billion zone. I think you'd start seeing some of those players say, I compete against, you know, every day you're competing against either Palo or CrowdStrike or Microsoft. And so if you reflect, or Zscaler, and if you reflect on that, you got to ask yourself, I have to go out and beat those companies, not just the 20 venture capital backed names in my space, right? And so I think that's where you will see M&A. And yeah, that's what we expect.
Yeah, it's coming. When you get the best of both the IPOs and the M&A, it's a fun market for everybody as well. Ellis, do you see 2024 is a very interesting year, maybe for both of you to comment on. We have this little thing called an election in America that's, you know, happening as well, which is going to be quite interesting. Capital markets get interesting in those time periods as well. A lot of IPOs like that little September, October window. We have a lot of events happening globally there. Do you think you're going to see more early, or you think you're going to see some just go when they're ready to go, and regardless of sort of the bigger picture election things?
Yeah, I do think as we think about management teams, boards, there is concern, consternation around the election period itself. So I think our sense is that companies want to be ready to go through September, right? And then potentially on the back of the election. So I think this is a type of market that's going to have select windows of availability. So being ready, being kind of on the front foot in terms of ability to go public, I think is going to be incredibly important. So starting that work with investors and education, just so that you have the ability and flexibility to tap the market when it's there.
Yeah, I agree. Matt, last question for you, and we'll wrap up here. I'm watching as an investor the amount of capital going in this AI market, and it's pretty incredible. I don't know if you have numbers that you can cite, but you know, measured in lots and lots of capital. And we don't see a lot of capital yet really being deployed in the security areas, relatively small fractional areas. I mean, what do you see from AI from the capital point of view, if you could, and how's that having an effect on potentially the cyber markets that you see?
Yeah, so we are seeing big rounds in AI with big valuations. And we're seeing a lot of, I've never seen this before, but we're seeing a lot of that come from strategics. And part of it is like the NVIDIAs of the world, the Amazons of the world, and the Microsofts of the world. They're going to like change our lives with AI. I think we've actually done pollings with the venture capital community, and there's very binary points of view on AI. So some people think, well, there'll be a couple winners, or maybe the winners will be in the next wave, like maybe we're in the Yahoo phase, not the Facebook phase. And so I think AI is tricky. I think where people are landing with security in AI is, and I think the natural landing place is, with Gen AI, you should see more code developed. You should see more applications developed. So does code and application security, does open source security become more critical? And that's where Snyk, Checkmarx, and others, and frankly, we're seeing GitHub and GitLab also try to consolidate spend and make DevOps, DevSecOps. And so I think that's the most natural place. I think the other natural place, and I think where you were probably headed, is now that the bad guys have Gen AI, it's like ChatGPT is not just for everyone, it's for the adversaries. And the quality and the breadth of attacks is going to be harder. And so I think that right now for security, investors are focused on code security and the DevSecOps tool chain. But I think 24, 25, people will realize overall cyber spend has to go up because the adversaries effectively got another weapon.
Well said, Matt, and thank you both. Alice Takhtajan, thank you so much. Matt Seiter, thank you for joining our partners, JP Morgan with NightDragon. Really appreciate you both coming in. Great insights, both of you. Thank you so much.
We're grateful.
Thank you.
Thank you.